Yes, perhaps the CPI print takes the wind out of its sails a little bit, like every risk asset on the day. But what has been blowing us higher when it comes to Bitcoin? Is it ETF flows, or is it something else more fundamental that's happening?
Sure. I'm sure that folks would like to say that a part of it has to do with Jack Dorsey wearing the Satoshi shirt during the Super Bowl. But it really is, to your point, U.S. inflows coming in around the ETF. We saw April and June BTC call buyers with strikes at around 70K to 75K, which are all-time high prices. We're also seeing a lot of that narrative around the April 19th halving coming up, and overall spot and option positions that are really gearing up for pricing to break all-time highs in Q2. You saw BTC perp futures open interest also cross 11 billion, which is the highest ever since December 2021. So a lot of U.S. inflow momentum going on right now.
And I hate to always just talk about and focus obsessively about price, but ultimately the market being dictated that we're going to eclipse this 50,000, does it think we're going to eclipse the 69,000 that we've seen previously?
Absolutely. It looks like, I mean, again, from anywhere between 70K to 75K, that is very, very bullish. And we really haven't seen those prices historically. So yes, it does look like we're going to eclipse those. And it really does look like that's coming from the US side. You're seeing that reflected in Coinbase BTC pricing, which was trading at a premium to Binance BTC pricing, which again reflects the fact that you're seeing a lot of US inflow coming in that's pushing that price higher at a premium, and as well reflected by the ETF inflows, which continues to make that narrative strong, US specifically focused.
We were reflecting on the show yesterday that if you think about it in really simple terms, from kind of end of 22 to present day, there's this kind of minimal jump on Bitcoin from $44,000 to $48,000 per token. And in between, all kinds of chaos and volatility, lows of 15,500, a brief peak. But what also happened in that time is that thousands of altcoins and other digital tokens just cease to exist, right? They become illiquid. How much of this story is about Bitcoin kind of being the only stable option if you want some exposure to a cryptocurrency?
I think it's pretty crazy that we're talking about Bitcoin now as being the stable currency, but you're even seeing that reflected in some of the language that Fidelity has pushed out. I would say that's very much true. However, Ethereum is still playing into that narrative. A lot of what's going on right now is with regards to the restaking narrative in Ethereum driven by EigenLayer. And so you're seeing a lot of narratives around both that and an ETH ETF. Yesterday, you saw that Franklin Templeton also submitted an application for ETH ETF, which caused a small bounce in the ETH price. And so we're likely going to see that happening with ETH as well. And you are seeing other applicants for an ETF, whether it's Solana or other altcoins, where that may also lead to, some of that lower volatility around those tokens as well.
You've been building for a long time, whether it's at August, whether previously you were helping being on the founding team of Falcon X, but also you're in the investing space and understanding what was going on over Pantera Capital. What is the building like right now when we think about sort of the oxygen being sucked out of the room by the OGs of Bitcoin and ETH, but still Solana getting a look in, some of the altcoins? What's being built from an infrastructure layer, from a DApp level, from an actual go out there and use this in some way, shape or form?
It has never been a hotter time to build in this space than now. You are seeing folks doubling down, people who have been in the space for years, who have really clarified what are to your point, the problems on the infrastructure layer that need to be solved for people to actually be able to use this at scale. And so the biggest thing right now is account abstraction, being able for these applications to be used on a front end without having to deal with all of the interactions with the blockchain on the back end. We've been talking about that narrative for years. How do you get to a point where you can just send a transaction using a front-end UI? And we are getting closer to that point. Again, this infrastructure takes time to build, and every single day we're getting closer to that. Like I said, it really just hasn't been a hotter time to be a builder in crypto than today. So it's very exciting.
Real quick, halving due in April. Do you care?
Absolutely. I would say there's always a narrative around it. It's whether it's going to be buy the rumor, sell the news. That's typically what we've seen to date. But again, it does take a while for the flows to come into the ETFs, especially on the RIA space. So it'll be interesting to see what happens on the retail side, what happens on the RIA side, and if that narrative is going to be reflected with users there. And of course, Asia. We haven't seen as much Asia inflow with all of this being historically led right now with the US side. So very, very interesting. And then the ETH BTC ratio.